What's up, Denver? Chris Lopez here. And today we are doing a beginning of a new series. We're doing some lives with Chelsea Scott, who's our Chief Investment Officer and building out the portfolio analysis for us here. And the reason we want to start doing some lives is just to start taking some of the long form content we do in the podcast, which is very in depth. It's very meaty. It's great content, but do two things. Start having some more bite-sized, shorter snippets that are easier to digest and not a full-blown, hey, let's turn the fire hose on you for an hour, but hey, shorter bite-sized stuff. But also start getting better interaction with the community, getting that questions and answers. I've done these on and off over my career. I love the interaction. So our hope and our goal is to do these, get the audience plugged in and start getting some Q&A, live Q&A. If you can't make it, email it in. So with that out of the way, Chelsea, good afternoon.
Well, hey, Chris, how's it going?
Good. I'm excited to be doing this with you and about the whole, new series. We officially launched PA last week. I think it was last week.
Yep.
Last week. And we have 2 podcasts recorded in the pipeline. We got more in the works. We got way more ideas than we could record so far this year. So it's really good stuff. And now we got this add on here as well.
I know. Super exciting. It's a really exciting time and lots of growth happening very quickly. We are in the fire hose as much as everybody listening to us is in the fire hose. So it's happening on both sides of the table here.
That's the way it should be.
Yeah, I know.
Keeps it fun.
That's how growth happens.
So today we're gonna go over a high level version of portfolio analysis.
Yep.
We're gonna talk about who can use it, and then also some other brokers and real estate vendors that we can potentially partner with as well to help provide more value to clients. Mm-hmm. But this first one, we're also, a problem we've encountered is just how can we simply explain portfolio analysis, because it is complex.
Yeah.
It's a new thing to the marketplace, and people are often like, okay, I kind of get it.
Yep.
So have you gotten the magic explanation yet, Chelsea?
Yeah, I have a 3-word scenario for you, or just 3 words to try to sum it up. So it is organizing, tracking, and optimizing your real estate investments. So we can kind of take each word and branch off from there. But this is how I describe it in the simplest fashion. People want to get into real estate investing. If you're thinking about becoming a real estate investor, or you are a real estate investor, it's easy to go out and acquire properties. Maybe not in this market. It's not as easy. It hasn't been as easy lately, but it's easy to look for a property, get a property under contract, and then start renting a property. Those are kind of the steps you take in order to start the process. But once you have done that once, twice, 5 times, 10 times, 15 times, it starts to get really complicated. You have a lot of moving parts. And in many instances, you may have another full-time job. And or you may have a family, and or you may have other responsibilities likely that you are taking care of, and real estate is not your primary focus.
Mm-hmm.
So it's best to put it into one central location, one repository where everything is housed and it's just really clean, really simple, really organized, and you don't need to do anything else with it. We take care of that part. Now, once it's organized and we have all the information in one spreadsheet, we can then help you track it. So as market conditions change, as your property manager may change, as taxes change, as market environments change, neighborhoods change, we help you to make sure that it's the highest and best use for that property. You're renting it and doing the absolute best you can with that real estate. And so the third piece is optimizing. Do you really know if you are receiving your highest rent rates possible for your each property? Do you know if your property management company is really working out? Have you checked in on them? Have you made sure that the property is offering similar amenities to the local area that you're in, so you're competing properly? And then do you know if maybe adding value or flipping a property or turning it over makes sense? And so that's the optimization part. So it's those 3 legs of the stool really set people up to understand their portfolio, and then most importantly, I think, make decisions as to how they proceed forward.
Like, what do you mean? Like how? So paint me a picture out here. So I put it in a spreadsheet. Is there something I put in here like one and done? Am I inputting it? Who's inputting it? And then how do I make decisions off of that? I don't understand.
Okay, so generally I'm inputting it for you. So we have in this case, Zoom. since COVID. Maybe it'll be in person in certain instances, but
Eventually.
one day we'll see people's faces again in person. But right now we're inputting the information. Just I'm doing it for you. And it is sort of one and done at that stage, except things are going to change. So we're going to check in quarterly, semi-annually, annually over the next few years and just kind of see how that goes. So, how often it is really is circumstantial and what works for the person. But the one and done part in the input side is great. But now it's decision making time. Should I sell a property? Should I refinance a property? Should I pick up another property? Should I cash out refinance to buy another property? Should I pay down the principal? Should I start working on principal pay down because of my goals? And that is where you are starting to make choices based on the information in the spreadsheet. You're looking at every property side by side, seeing how each one's performing, deciding which one's your best player, which one's maybe not performing optimally, and how can we change that?
Okay.
Yeah.
And then as people are growing their portfolio, it will update it and they'll be able to review it as more properties, market changes, and they'll just get that data, work with you, our future team we're going to build out, and be able to interpret the data and then go out there and make, hey, here's 3 options. Here's the pros and cons of each. What's the right one for you under these scenarios?
Yeah, that's a great way to look at it. Or I'm thinking about buying another property. Does it make sense? And now let's talk about setting up goals.
Great.
So we set up that goal set and we make sure that you are creeping toward your end goal. And again, real estate investors generally, starting with house hackers all the way to the straight just investor who's putting down 25%, may not be thinking about the end game. They're likely not thinking about the end game. They're just thinking about, great, I've got this cash flow in place. It's making me a few grand a year or maybe $10,000 a year. And this is great for me today, which it is. But what about when you want to retire? What about when you're done? What about when you want to put it into a trust and maybe hand it down to your heirs? What about those steps? And that's reset goals for this portfolio. And so another simple way to really describe this is to talk about it very similarly to the way you would handle your equity portfolio. If you have a mutual fund, if you have a 401k, if you have some kind of a stock portfolio, somebody is managing that for you. You generally have a portfolio manager, whether it's something you're actively involved in or if it's passive for you, somebody's doing that. In at least as many people we have spoken with, we don't know anybody that's doing that in the real estate space.
Okay.
So
keep talking about this because I know there's so much to it. What other benefits do people have?
Yeah. So other things that people can consider when they're doing this is we do this strengths, weaknesses, opportunities, threats analysis. And the strengths, weaknesses, opportunities, threats analysis is basically saying what's happening within the property, its internal benefits, and then what's happening externally. So what's actually going on in the neighborhood. And those are things, again, people, they don't generally want to track. They don't want to think about these things. They're not things that are on their mind day to day because real estate investing likely is either a side hustle for them or it's something that is just secondary to their primary income generators. And so they're not looking at that. So we are overseeing everything for you from a high level, not day to day as a property manager, not looking at if the sink broke or the furnace needs to be replaced, right? But more like on a high level, is this still really optimally performing to meet your passive income goals, to meet your equity goals, and to actually be a portfolio you can happily hand on to somebody in the future. So you can actually pass on and say, this is performing really well. We've stayed on top of it for 15 or 25 or 30 years. It is now exactly where we want it to be. And it is now performing for us completely passively when we're ready to exit out of the game. And that's a really big part that people miss. They get into it, they get started in it, and it easily becomes overwhelming and they easily get lost. Let us do that part for you. Let us track and optimize and organize all this information for you so that you have a really good idea of how things are performing, but you're not lost in the day-to-day of the portfolio. And then we can help you make choices on, again, buy, sell, refinance, or leverage or size up.
Because with all this, I mean, like the flip side of this, if someone does not track and stay organized on their investments, you can't make optimal decisions that way because you don't have the data, you don't know what's going on. And I mean, what's the kind of paint a picture for, hey, we got, 2 clients, twin brothers, what one does portfolio analysis, one doesn't. How much richer and better looking and everything else is the one that does, maybe not quite that far, but like kind of like take that distinction, because I've noticed this pattern as well. You talk with people and they've been so great at acquiring properties, but there's just not the resources or education out there for people to really play that long-term and wealth building game in real estate, unless you're an institutional investor or a family office investor.
Yep.
Um,
Okay, so we're going to call them Dave and Fred. And
Okay.
here's why they're Dave and Fred. Okay. Dave is a data guy and Fred operates on feelings. Okay?
All right.
So Fred, the feeler, is not the portfolio analyst type of investor. Okay. He decides he's not going to go through portfolio analysis. Fred just trusts his gut. He understands the market. He has a broker's license. He's been doing this forever. He knows what he's doing, right? And Fred starts his sentences with, well, I feel like now's a great time to sell. And I feel like this property is really maxed out in equity. And I feel like this is exactly what I should be doing with this property. That's how Fred operates, right? Whereas Dave is much more data driven. Dave uses the facts. He looks at in-migration, who's actually moving into this neighborhood. He looks at the demographic of those different people. He looks at the different street by street productivity in that neighborhood. Are things popping in one area and slowing down in another? He looks at the actual metrics of his portfolio and he makes choices based on the data. He looks at interest rates, he looks at inflation, he looks at macroeconomics, he looks at microeconomics, and he thinks about all the different components and makes his choices that way. Now, we don't have proof yet because portfolio analysis is still early on, but if you talk to anybody in another space where portfolio managers, portfolio analysts exist, they would tell you that performance-wise, those who actually manage their portfolios and have somebody tracking it and understanding all the metrics involved and the data are going to outperform somebody who's trading from their home and just using E-Trade to make their day-to-day choices, and or somebody who may be running their own retirement fund as opposed to a large institution that's running their 401k. So it's that concept. It's, feeling Fred versus data-driven Dave.
That's a great, that's metaphor. That's a great explanation.
Yeah. Okay, great.
So I know we're about halfway through the 3-minute mark. Anything else you add about the portfolio analysis overview before we switch segments?
Yeah, I think what I want to say to everybody is if they are an investor, especially if you are currently an investor, it's worth a 15-minute consult call to just learn more about it, to see the spreadsheet in play, to understand how it works and why it may be different than how you're tracking your own portfolio. Or maybe why it's not. Maybe, you're really, really great at spreadsheets. You love to track your properties. You check in monthly. You look at your actuals. You look at the market. And that's something that you do regularly. Perfect. If it's not something you do regularly, it's worth the time to take 15 minutes and just understand how this could add value to your process.
All right.
Okay.
And we have a link on the website too, denverinvestmentrealestate.com/PA consult. And that's a great way to get hooked into Chelsea as well, or email her, Chelsea at Envision REA.
Great.
So Chelsea, moving on to the next segment.
Yep.
What do you got for us?
So we came up with this partnership model that we are in the early stages of creating, but I've received some great feedback personally from connecting with some friends of mine in the luxury real estate market. So essentially, if you're a luxury real estate broker and you are selling people mainly their primary residence, we can partner with you in order to allow you to continue the relationship with your client. So as a very big generalization, but I'd say, maybe 90% or just more often than not is probably the best way to say it. More often than not, when a luxury real estate broker buys or sells a property for their client, that is a one and done relationship for the immediate. There could be future opportunity down the road where they work with that client again, but initially they are working with that client to find their dream home. They put them in their dream home as the buying or the listing agent, and then they move on. And usually, as long as they're happy, they're not going to hear from them for a while, or something major hasn't changed in their life. What if you could go from completing that transaction and then talking with your clients about the possibility of investing in real estate? The reason being that there are many people that we may know personally, or we know that have bought their primary residence, but they're also real estate investors. Yet a luxury real estate broker may not want to go and search for investment properties. They're completely different space in the market. They're just, they have a different price point. income properties have a different purpose than a primary residence, and it may not be a space they're as familiar with. So if they're not as familiar with moving into finding an investment property, you can pass them on to Envision Real Estate Advisors. We will transact, we will create a portfolio analysis for that client. We will give them all the resources that we have, including property managers, leases, CPAs, tax attorneys, all the different people that we need. We'll give them a full referral bank to get them started as an investor. And then we will provide a full referral fee to that broker. So basically, for not really actually having to do anything else, you're now providing another service to your client while receiving a benefit, but without having to actually do the work of now finding a whole other segment of the market that you have to then dig through in order to find that real estate. And so that would be, that's how that works. And let's say that that client were to transact with us multiple times. They bought 1, 2, 3, 5 investments with us. There would be a tiered referral fee structure. So this could go on and create a residual income for that broker. And so we have worked with a few brokers that we are currently testing this with right now to see how it's going to work. And there seems to be great interest, partially because they want to continue that relationship with their client and of course create a residual income for themselves, but also partially because some of these agents have approached us about becoming investors themselves. So of course, if you're a broker out there that isn't as versed in investing, we can also work with you to help you find your own investment. So there've been a few reasons why some luxury brokers have taken an interest in this path.
Yeah, I mean it's a great idea. So this is just a way for luxury brokers who are often working with high net worth individuals, but a lot of them don't understand real estate investing.
Right.
Can get in the game, and the luxury broker can continue to provide just amazing service to their clients and help them in their overall real estate journey.
They can. I mean, some of the stories I've heard include there are quite a few out of state people that are moving from to Denver and have during COVID. And they understand.
Yeah, there's a few of them.
There are just a few, right? There's a handful of people that are coming out of the coast or just want to be in Denver, and they can work from home. And this has maybe been their dream city, and now they have the opportunity to be here. They're also moving to the mountains as well. We've seen that in some of our investors who have mountain properties are actually housing some people that are looking for their homes there to relocate. So if that's the case, they understand the intrinsic value of the Colorado real estate market from an investment standpoint, as well as to want to live and operate here in either Colorado or in Denver or in Colorado Springs. And so when they come here to the state, they may actually be interested in investing. They're just getting their feet on the ground here, and they may have just sold their property and now they want to have a beautiful home for themselves and they want to start investing in this city. And so it's a great way to bring them even further into this city and give them a stake in the community they're going to be in. Now they live in that community and they invest in that community. And so out of state relocation people that are coming in to this state are just a great possible client as well.
I like it.
Yeah.
And so I know for the third segment, switching gears, I think you're starting to bring there's some really cool neighborhood analyses too, right?
No, I am. Yep.
Yeah.
And so
let's talk about that because this is really exciting.
Yeah, I'm super excited myself about this, Chris, and I'll tell you why. I'm super excited in general because it's just another growth point for us, but also because it's something I did in a previous life, and this was really important for everybody, underwriters, developers, investors, syndicators, they wanted to see this information. So what we're doing here is called the micro neighborhood analysis. And so what that means is it's not just a zip code analysis and it's not just a neighborhood analysis. We are fusing multiple neighborhoods together to create what we consider to be a target market for renters. So this is something where, in this example, I started with the University of Denver neighborhood. This is one of the first ones that I've created, and it includes a section of Corey Merrill, a section of Platt Park, and a section of University Park. And the reason is that if you look right in the middle of that map, the University of Denver is basically smack in the middle. Yeah. So I took an east, a west, a south, and a north point that I felt were very realistic based on the fact that I personally have lived in this neighborhood. So I know it pretty well personally, but also these different sections all house both families for the school districts and for the attractiveness of these neighborhoods, but also have student rentals. And so you see those on all the different rental channels. So you see it on apartments.com, you see it on Facebook Marketplace, you see it on Zillow. You will see them marketing to renters as well as marketing to families. So most families in these neighborhoods are homeowners, and most of the rentals are going to go towards students or maybe a family that's moving in as a renter. School districts are great here, so it really could be rental territory for either demographic. But what we did here is in these microanalyses, we let you know the boundaries. So we show you the streets and how we've divided this little square, and then we explain why we have done this. So, for example, all three of these different neighborhoods cross in the 80210 zip code, so it makes it really easy for searchability. So, for example, on Facebook Marketplace, you can find just 80210 rentals, and so you can go to different locations to actually aggregate this data. So pulling the data when you have a similar zip code made this actually a lot easier. So here we came up with the type of property: a studio, a 1-bed, a 2-bed, how many bathrooms, the average square foot, the average rent price, and the average price per square foot. So that's basically the information that we created with a sample of about 100 different properties that are currently up on Zillow in this location in order to create this price per square foot. So then we go to Renometer, we see what they say, and then we come up with our own choices as to what Envision REA is now suggesting that you rent your property for. So that's what this all boils down to, is what are we suggesting you rent your studio, your 1-bedroom, your 2-bedroom for? Because when somebody comes into a brand new neighborhood, if they are especially an out-of-state they just relocated to Colorado, maybe they don't know Denver as well, they live in Colorado Springs, maybe they don't know Colorado Springs as well, they live in Denver. We can tell them, well, within this little square, if you're going to buy a property here, this is the rent range we suggest you start marketing the property at. And it's a really targeted approach, and it aggregates data from multiple locations, and it gives us the ability to understand, does the square footage matter? Are people getting more for a bigger property? Do the amenities matter? Do the number of bathrooms matter? And in this instance, we found out that it does. They do. A 2-bed, 2-bath will get more rent, almost $200 more than a 2-bed, 1-bath. So in that case, having an extra bathroom matters. And so there are little details like, what about the square footage? Does the square footage matter? And this law of diminishing return shows up here as well, which is we are seeing that the larger properties, the 4 beds, the 5 beds, they are going to get less per square foot than your smaller properties. So you're going to get a higher per square foot price on your 1, 2, and 3-bedroom properties. Another cool thing we saw come out of this was that I noticed that there weren't that many 3-bedrooms in the square. They had the least number of 3 bedrooms.
Really?
So for some reason, it's like people jump skipped over the 3-bedroom unit. So if you find a 3-bedroom, you might find it to be really valuable.
Okay. This is great.
Yeah.
And this first line that's the end of it, right?
No, I just chose to highlight one neighborhood that most people would know. We will have one for boxes that we sell a lot of properties in for investment, as well as the most popular neighborhoods that people want to invest in. So, it's just creating these boundaries that allow us to really hone in on, if you go north of Louisiana, you're starting to cross into a whole other neighborhood. You're getting closer to Wash Park. You may see rents bump even further because Wash Park rents at an even higher space. But if you just did a one Wash Park look and you didn't include other sub neighborhoods like maybe West Wash Park or what Country Club's doing, it's hard to give yourself sort of an analysis of why this particular location may have better pull for me as an investor versus just a few streets over. And that absolutely happens in Denver.
Oh, yeah.
One example we recently went through with a client was the Fitzsimmons area where the Auraria campus is. We saw different rent numbers that came up the closer you got to Fitzsimmons, clearly, than when you crossed Colfax. And that's not necessarily where neighborhoods cut. Neighborhoods don't necessarily cut at one street, but you notice and you realize where that street division is for the level of rent that you can pull in. And it can definitely be drastic. Like in most cases, Platt Park pulls in more rent than University Park. But when you pull it all together into this box, you can say, if you're marketing to a University of Denver student, this is where you want to focus. And these are the types of rents that you can pull if that's the demographic that you're going to market to.
Well, this is very cool.
Yeah.
So what's your plan for, like, are you doing all the neighborhoods or what's
like
the,
I said, I'm
what's
going
the
to
muse to
start
this?
with the hottest neighborhoods in the terms of where we sell the most real estate for investors, ones that are most useful for our current clients, and then we will branch out from there. And we also will try to fish for neighborhoods to see, which neighborhoods we think will pull in higher rents. So this way, Feeling Fred doesn't have to guess on what he's actually going to pull for rent. Whereas Data Dave is going to know. He's going to tell his twin brother that, you really should have looked more closely at this data, because the 3 streets where I bought 3 streets over from you, I was able to get $200 more in rent for the same unit type.
I'm impressed you came up with those 2 names on the fly like
on
that.
the fly. Do you like that?
That was good.
That was quick, huh?
Yeah.
Thank you.
I'd come up with 2 names, but not have done it in the context you did.
Okay.
So that was impressive, Chelsea.
Thank you. Thanks, Chris.
So as we kind of wrap this up, what are any final closing thoughts on the micro neighborhoods, on the portfolio analysis? We got like 2 minutes.
Yeah. Be Data Dave. That's my final thought.
Okay.
Be Data Dave. Look closely at your investments, track them, understand them, see if it makes sense to leverage them, see if it makes sense to size up, see if it makes sense to make some changes to your portfolio and to make it better, because just letting them sit dormant all the time is not the best strategy. And if we let our equities investments do the same thing, nobody would ever caught any of the dip when we had COVID. If we just said, hey, I own 10 stocks over here. I've loved these 10 stocks. They've done so well for me. And if you never touched them or looked at them during the dip in the market, you would never have caught some of those great opportunities.
Yep.
And you could have potentially lost.
Yeah.
Let's not do that to the real estate investment side of your house, right?
All
Let's
right.
not. Let's
I love
with
it.
Data.
So
Yep.
wrapping up with Chelsea Scott here, who's building out the portfolio analysis.
Mhm.
The key message here is be Data Dave. Know your investments, track your investments, optimize them. And what we're doing here with portfolio analysis is a big tool in your tool chest. It can help you do all that. So Chelsea, this was fun.
Great.
Thank you.
It was great. Thanks,
Yeah.
Chris, as always.
All
Appreciate
right.
it.
Denver. Talk to you soon, guys.